And we are live here on YouTube, Tackle Trading's Halftime Report, a daily market analysis show where we break down all the news, the charts, the stocks on our mind and that are grabbing our attention out there across the world of the financial markets. And I've got my brother Matt, I've got Cody on the back end producing and hosting, and myself here, Tim Justice. Welcome out, everybody. Matty, how you doing today?
Tim, I am doing extremely well, and I'm very excited that our president gave that speech he did today.
Yeah, we're going to talk about Iran. And Cody, I do want you involved in that conversation. Obviously, we have a lot of conversations about politics and how they affect markets. There's nothing more important today than what is going on in the Middle East with Iran. From what I know, and correct me on any of these headlines, Cody, if I don't get them 100% accurate from what you know as well, Iran launched 13 ballistic missiles last night, and they hit very key targets, and but yet no American lives were lost. Matt, you and I, we were on the phone when the president went live. You said, hey, I'll call you back right after. And we both watched it. Let's get Matt's reaction first. Matt, how the president handled it and responded to it. What do you feel about the whole thing?
Number one, excuse me. I don't believe our foreign policy in the Middle East has been amazing over the course of the last 4 decades. And I'm sure the president last night and this morning was probably getting a tremendous amount of pressure to have a military response. And I think he made the right decision by pleading with our allies to get involved more, NATO to get involved more, he specifically mentioned Germany, the UK, France, China, to get more involved in negotiations of perhaps a new Iranian nuclear deal. I felt like the economic sanction route was the appropriate route to go in this situation. And I think, as the market can indicate, as we've seen over the course of the last few hours, the market's celebrating it. The market's celebrating as well. I don't think anybody wants another war in the Middle East. And I'm very, very happy that our president did what he could to de-escalate it, but still show strength. And I felt he accomplished that.
100%. Yeah, there's no question. I actually, I really enjoyed what he was doing there in that speech. And he came out, he had to be strong. He had to be a leader. He had to say some things to the global audience that was going to be listening to it, including Iran, including our allies, and including our service people, and I think that the president really did lead right there. I really do. And
I felt like it was one of his better speeches in a very, very, perhaps maybe the most important moment of his presidency so far.
Yeah.
And there's, let's face reality, there are war hawks that really, really push war in the Middle East. And for him to show some restraint, not only in terms of that, but in terms of the tensions, I mean, this could have went a lot of different ways. And I'm just glad because I personally do not want another war in the Middle East. And, Trump, I felt, showed strength, but also indicated a willingness to have discussions, to discuss for, and he actually mentioned the strength of economic strength of Iran in his speech and the untapped potential of the economic resources of Iran. So that was a little plea to the greed side of Iran, I'm sure, but I felt like it was a good speech, and I felt like it was the appropriate speech for the current moment. And it's been an amazing last 12 hours in the market, though, Tim. I mean, from the time this first news came out last night, I mean, I wasn't even watching the futures market. And the first time I saw that, the headline I just like, okay, I got to go check the futures market. And, the market really kind of spiked down pretty aggressively, down about 1.6%, about 53 points on the S&P 500 on the initial news. But then even before Trump gave that speech today, he really put out a pretty good tweet last night that I feel like settled it down a little bit, because it felt like it could spin out of control a little last night. And Trump sent out a tweet that all is well, no casualties has happened. And I felt that was the appropriate message at the time. And ever since he really kind of put out that tweet, the market kind of responded. And, now we're looking at today versus 12 hours ago. And, we got a lot of volatility, but really kind of everything corrected back down. I'm sure we'll get into gold and oil here in a little bit, but you're now approaching the market at all-time highs here, just right under, like 6 points right now underneath those all-time highs. Market trying to break out on a very large hammer candle here today. We'll see what can happen, but the market is celebrating the news so far.
You know, and I do want to look at all the market action as well and kind of talk about what to expect. It would not surprise me by the end of the day if we're at the all-time high. You know, we're ramping right now. We've got volume behind it. The momentum is on the bull side.
That's a good bet for you and I. That's a good stake bet for
An
you.
over under.
Yeah,
over
yeah,
under.
I like
that's
that.
a good stake bet.
A Beyond Meat McDonald's burger bet.
That's not going to happen. but bet I'm going to say it settles underneath the all-time high. You're going to take the over?
I'll take the over. Yep. Stake bet. Yep.
Stake bet.
I'm down for that. Cody, I do want to get your thoughts on this because obviously politics is very near and dear to your heart. You track it each and every day. You're a critical thinker. You know, you put a lot of time into thinking about your opinions and whatnot, and you watch the markets as well. What did you think about Trump's speech, the whole tone of where we're at right now and the market reaction?
Trump's speech, I think, was very presidential of him. And not many speeches Trump gives are presidential. Some of them are very Trumpian, and we've heard these terms, and it's one of the things that a lot of people hit the president on. But this one was very presidential. He had some hard lines on things, so he was being a little tough, and then he also had some olive branches. So he did a very good job of basically stating this is what the situation is, this is where it could go, this is where it could also go. And then he opened the door to kind of say, hey, let's talk about some things. You know, you fought ISIS in the past. We fought ISIS in the past. ISIS is bad for both of us. Maybe we can come together and do that. He talked about, you know, the de-escalation, the way that things could get better. It was a very good speech on his behalf. And the market did respond off it. And as Matt was also indicating, if you look at the intraday chart between last night from when the missiles hit to where he tweeted, to where the markets did, to his speech this morning, they directly correlate, and I think he did correct action, both with his tweet. The tone of his tweet itself was really good.
Mm-hmm.
It was. It was one of his better tweets.
Mm-hmm.
He definitely. I think sometimes he can be a little off the cuff, and you know that's one of the issues. A lot of we all have when he says some things, but I think that his tweet and his speech were well thought out. They were meant to de-escalate the situation, whereas a lot of people thought that he would be escalating the situation. I think that there was probably a long night between all of his advisors and from the Pentagon and just looking at all the different outcomes of what could happen as information came in. And I actually really like the way that this turned out. And from that, like if I were to join the stake bet, I'd probably take the over because the market's been running on a lot of strength, and
I'll take a steak next time I'm in Hawaii.
All right, we'll do a steak bet. I got a perfect restaurant too. I think that these tensions coming down, and money's flowing out of some of the safe havens and things, and when we get into gold, we'll talk about that, and out of bonds and back into the market, I can see money moving inward. So
I just want to clarify the bet real quick though. We're talking 4 o'clock Eastern or 4:15 with the futures market.
Talking 4 o'clock Eastern. Knock it off.
I just need clarity.
You're not getting that. You're not getting that aftermarket bounce, buddy.
Oh my goodness. Well, stocks across the board, Dow, S&P, NASDAQ, and the Russell, they're all kind of behaving in similar fashions. I will tell you this right now, the NASDAQ already at the all-time high. It is breaking.
Yeah, it actually broke out, Tim. And that was something I was going to bring up just barely. I'm glad you brought it up. NASDAQ actually breaking out here today, showing tremendous strength on the NASDAQ. We talked about this yesterday when you were asking me, or it might've been on Monday when you were asking me about our index kind of rankings, and NASDAQ 1, S&P 1A, NASDAQ 1A and S&P 1B. NASDAQ closing above, if it closed above those all-time highs, 9,000 tomorrow, 10,000 within a month. It's just showing a lot of resiliency right now, and it's showing a lot of strength, increasing volume on that hammer candle. What don't you like here from a technical perspective?
You have to love it.
If you remove the news, right? Yeah. If you remove the news and if you remove the emotion of the situation, and you're solely looking at this from a technical perspective, increasing volume, increasing moving averages, increasing momentum on a breakout, that's got to be a bullish indication.
Yeah, it's definitely very bullish, and there's many companies across tech that are looking great, and we're going to get into them here in just a minute. One of them is going to be Tesla, which, by the way, hit the all-time high for market cap for a U.S. automaker, which is incredible to me.
I just want to see Elon dance again.
Oh, dude. I mean, he can absolutely do that again right now. He's got a lot to celebrate, quite frankly. I mean, I don't care what we think of his dancing. He does have a lot to celebrate. He's been winning that fight for a little bit. I do want to get to crude oil before we go move past the markets, though, because this is an incredible candlestick, almost the exact opposite reaction in terms of volatility that you saw in the stock market, Matt. Stock markets were down. They rallied all the way up, and they're showing a lot of strength. Crude oil was up based on the idea of Middle East tension. And then with this resolution, and we don't have resolution yet, by the way, I don't want to use that word, but crude oil is coming down big time. And you also had an EIA number. Help us understand this chart, Matt, based on what you're seeing, because that's a candle you're going to point to for the next 6 months and say, look at that.
Well, this one really does remind me of the Saudi Arabian one, right? And I said yesterday that there were some slight differences here because after that first one happened, when Saudi Arabia was attacked with those missiles, my opinion was very, very simple. Saudi Arabia is going to get their production up and running faster than people think. It's their number one resource. It's the number one thing that impacts their economy, and they're absolutely going to do it. Yesterday, I really felt like, because of what we did not know, we didn't know what was going to happen. We didn't know what, we obviously yesterday, we didn't know, Iran was going to launch 13 ballistic missiles. And you were setting up for a pretty decent little trade here on crude oil, inside candle, slowing momentum candle, obviously not confirming, but, last night's futures market just, when that news hit, Tim, crude was just spiking. It went from 62.5 all the way to 65 in literally an hour, settled back down as kind of we started seeing last night, a little bit of the rhetoric decrease as well. And then as the market's just coming back down into a normal range, then that EIA number comes out this morning, Tim. And the EIA number was a very important number today because we were expecting a buildup in crude. We were expecting a buildup, a drawdown, right, of about, what was it, let me get the exact number here, 3.4 million barrels, and we actually saw an increase of 1.2. And so because of that, you were 5 million barrels off on the expectation, and that's going to put a lot of pressure on crude oil as well as supply starts to increase. And that came out right here, Tim. So obviously, as the news is kind of settling down, the market's just settling down here. EIA numbers come out right here, put a lot more pressure on crude. And now, Tim, I asked you this, and I'll ask again. Does this make crude untradeable in the short term?
Did we lose Tim? I think we lost Tim.
Yeah, I think we lost Tim. What do you think, Kobe?
I definitely think it makes it untradeable right now. There's a lot of volatility in it, both news-based and the inventories. And you mentioned the EIA numbers. They're showing an increase in supply or a higher than expected supply. So then the supply and demand does add to that. 4 days ago, we thought oil was going 66 or higher.
Yeah.
And for 3 days, it popped up with those big tails or those big wicks to the upside. And now that we're seeing it sell off, I think oil is having some decreased volatility due to de-escalation, and then also the actual economics, the macro of supply and demand are combining to just kind of put oil back where it should be. Now,
it's just with what we're seeing in crude right now, it's just the volatility. I mean, the news is the most concerning aspect of all of this, because although we like the de-escalation here from a geopolitical situation, nobody knows exactly what is going to transpire, and nobody knows the time frame it's going to transpire. And until we see more clarity coming out of that, I mean, Trump basically indicated today he was in a wait and see pattern, right? And so I think we need to see a little bit more clarity from the geopolitical situation before we give any, type of opinion where crude's going to go here, because I don't think anybody knows.
This, Matt. In that speech he gave this morning, he also did point out that the U.S. is the leading producer right now in oil, and he directly said, he's like, we don't actually need Mid-Eastern oil right now.
Yeah.
How does that affect what we're seeing in our crude market? Because I know that when these tensions did go up, the UK market, their oil spiked higher than ours did.
I'm going to answer that question first, then I'm going to get Matt's thoughts. I mean, this goes back to the prediction podcast, Matt, about what we thought crude was going to do this year. One of the reasons why I felt like it was going to be stuck in a range is that you have really efficient U.S. supplies right now. I mean, they can get supply into the marketplace. There's no question about it. I know crude oil has been going up in the short term. We've got a bullish ranking on it in the short term. And today's candle is crazy and wild. But through the year, my personal opinion is I think they're going to continue to see good supply numbers coming from the U.S. And that kind of keeps crude in the neutral long term for me and a cash flow instrument. But Matt, what are your thoughts?
You know, we've been energy independent for a few years now, right? And that's something we should all celebrate, because that means we don't have to meddle in the Middle East as much as we have for the last 4 decades. And so what the president said about being energy independent, yeah, he's absolutely 100% right there. And, you know, in the prediction podcast, Tim, my opinion very simply was, even if OPEC and Russia come to an agreement on additional cuts, which they're going to need to do to maintain the you know, the balance between supply and demand, the U.S. doesn't have to play ball there. No. Not in any capacity does the U.S. have to play ball there. And so the U.S. is going to continue to ramp up production, and there's no slowing that U.S. production down. So in my opinion, I still believe the supply side argument is going to be the dominant argument of the year. But and we saw that with the EIA numbers today. But that's really not the story of crude today. It's the geopolitical situation. Yeah. And again, I just want to be clear on my opinion here. Until we see more clarity coming out of what is actually transpiring in the Middle East, because I do not believe any of us actually know, I think crude is a stay away for me, at least.
Yeah, I'm with you there. I mean, maybe in 2 days, if it can get all the way down there to that 50, I'll look at you know, some far out, some Geno style 3 delta
45 put options.
Yeah, selling down in like 45, where, I mean, if it starts getting close to 50, that's when, you know, OPEC and people step in and start upping.
I will just remind everybody on that. The last time we saw this speed of increase in escalation versus decrease was right here when Iran launched those missile attacks against the Saudi Arabian oil suppliers. And that spiked crude really aggressively all the way up into that 62 to 63 area. And then once everybody kind of realized that the damage was not as big as it was, crude not only came down a little bit, crude came down all the way down into $52. And so if we actually are going to see that de-escalation in the Middle East, you're most likely going to see crude come down a little bit there.
Yeah, and that's something, you know, to add to your point. It took them less than 2 weeks to get that refinery back up and running. When you're talking Saudi Arabia, Saudi Aramco, the largest oil company in the world, you think about the amount of workers and engineers and people that they were able to have them working 24/7 for the 4 months to get that thing back and run. I guarantee you they had thousands of people working.
Oh, I remember you and I talking about it, and both of us were like, they're going to put every citizen in Saudi Arabia on that and get that up and running in no time.
Absolutely.
So there is some similar type of situations we're seeing today versus what we saw back then. Technically, I'm also seeing something very similar today that we saw back then. So I get the understanding that if we see something settle down around that 50-day moving average, maybe a bull put is in play there. But to me, it's not the technical situation. I personally need to see some more clarity in the geopolitical situation, because that can just, I mean, what's the problem with technical analysis? What blows technical analysis out of the water?
Random news events
And volatility, right?
Yep.
Yeah. And so is there anything more random right now than what will happen in the Middle East and how crude will respond to it?
Not at all.
No.
So to me, it's a stay away until we see more clarity there.
By the way, apologies. I've been bouncing out with my Wi-Fi, skipping in and out. So if I do have
anything
happen, obviously.
No, he's still here. Nope, he's gone.
I have a very deep thought here. Okay?
You better get it out real fast. Short Comcast.
Legitimate entry point on crude oil, but it's an advanced entry point. You could argue for zone defense all the way down in the 40s, Matt. You could say, okay, I'm going to play off the volatility. I have no problem with the traders saying the act of prudence and saying I'm not touching it either. But 48, 46, if you're getting your credit down, so
He's making the
I'm just
point
gonna let
you
him
just
go.
made.
It's funny. Come on, it's funny.
He does keep skipping.
It's funny. We get every other word. It's just
We are
funny.
getting every other word.
I
I
understand
get the
what you're
point he's
saying.
making, and he's basically making the same point you and I just made, is that you can play off the volatility and get some good prices right now. And then you were also adding to it that, there's some uncertainty in that. But those two strategies together, I think the clearest thing to understand is if you're going to take a big volatility play and it continues moving downward, you need to understand margin. You need to understand how it's going to be affected.
You could go out 23 days and you could sell 4 delta and you could capture a little bit of premium here.
Mm-hmm.
Okay. And in that 23 days, all I'm going to say is you're going to have some sleepless nights checking geopolitical news at 2 o'clock in the morning. And I just don't think that's worth it.
See, I completely agree with you. Here, let me ask you something else though. What if you went 60 days out below 50?
No,
not as many sleepless nights there.
You can't convince me of anything on crude right now.
Okay.
Yeah, no, the prudent thing is to wait. And by the way, we talked about aggressive versus conservative confirmation, even on swing trading stuff. I mean, it's true also on theta trading that. One of the biggest risks are these news events, including earnings events on individual companies, or with crude oil, the stuff we're seeing right now, same thing's happening in gold. It's just when you do get the volatility at some point, when you get clarity, let's say by the end of the week, Matt, or early next week, if things aren't escalating, could you then approach crude oil and do some kind of credit spread?
No.
Still going to wait.
No. Just tell me when you can trust the fact that Iran and America is really going to see a de-escalation.
Yeah.
All we've seen is de-escalation and rhetoric in the last 12 hours, guys.
Yeah.
Let's give it a few days here. Let's give it a few days. And I don't care about the technical situation. You had EIA numbers come out that were negative for crude. You had obviously the de-escalation, which is good for the world, but obviously negative for crude. I just think, with that candle we're seeing on crude oil and with the geopolitical situation and tensions and all of that jazz and the uncertainty here, I mean, guys, we haven't even talked about the increase in volume. Everybody dumped. Even Gino's insiders dumped today.
That is a huge candle, big volume candle as well, and a lot of craziness.
Give it some perspective. That is a 10% candle range on crude oil in one day. It's a 10% range. Nobody made money on crude today. Only algorithms did.
Yeah.
That's it. Everybody got shooken out. Everybody did.
No, I'm with you. And by the way, we're seeing volatility across the board. You had gold up there for a second. It did pop above 1600 for a very brief moment. And that's when you're moving into safe haven assets, things like gold. As it de-escalates, all the storylines are kind of propelling the markets one place or the other. I would not back off of a bullish position on gold here, though, Matt. I mean, there's nothing about the volatility that scares me here.
But there are some key differences. Yeah, you got the big, candles, the same way that happened on crude happened on gold over the night. You intraday ticked at 1613, and now you're down all the way down to 1562. So obviously, a lot of volatility here on gold today. But the key differences are very, very subtle, very, very important, Tim, and they're not that subtle. You're still above every single rising moving average, the 20, the 50, the 200, the 9 EMA. All of them are expanding. The 9 is expanding across the 20. And when you see that, when you see this type of separation happening here, Tim, both from look at the 50 to the 20 to the 9, when you see that type of separation, that's because you have a tremendous amount of bullish momentum coming into gold. Whereas on crude oil here, T, look at the 9. Look at that sucker crossover. That's a very important distinction. But not only that, when you're looking at gold, Tim, it's holding the breakout channel. It's holding that breakout channel right there at that right between 1550 and 1560. That's where you got to give that breakout channel. And even though over the last 3 days you've tested that multiple times, you've been holding that. And so what you're really kind of forming here, and that candle today is going to be very difficult to trade off of. It's got to be one of those situations where you're like, I don't care about that 1630 tick. Watch this high base, and then you might have some good breakout candidates. But I still got a very bullish rating on gold, safe haven asset. And this was running in front of all of the news.
Yeah.
It was running it for 9 straight days in front of all of the news. Money's still coming into gold, both internationally through the central banks and governments, obviously through investors from a safe haven perspective. And you still got the number one key factor here, Tim, is central banks around the world are going to print a tremendous amount of money. They're lowering interest rates. And last time that occurred, gold went from 1,300 to 1,850. I expect a very similar reaction here over the course of the next year or so.
By the way, if you're one of my veterans out there on our team Tackle and you've been at the halftime report for a year and a half, you've been through all of our courses and all that, you already know this. But if you're a beginner, I want to point something out here. The value of moving averages, Matt, is incredible. And if you look at the moving averages on gold, just having the 9, the 20, and the 50, I mean, that provides a lot of context to that chart. And there's differences between crude and gold here. Why do you use those MAs, by the way?
Well, because the market uses them.
Mm-hmm.
I mean, why do we still use a 14-day ATR when the average market cycles 7 days,
Mm-hmm.
right? So the reason is because when the ATR was created, it was back in the mid 1980s, and from support to resistance in the 1980s, you really had about a 14-day window. And as decades have happened and technology has increased and algorithms have dominated the price action over the last 10 years, the markets are simply faster today than they were 20, 30 years ago. And we all know that. But why don't we adjust the ATR? Because the market still uses a 14-day ATR. It's like I said, I've said this before to you. I once had a coach, Tim, that worked for me that was teaching a 3 EMA crossover of a 51 EMA. And I asked him why. And he says, because it's worked. I said, no, it hasn't. It's random. It's worked just because the market was bullish. It had nothing to do with anything. You're doing a disservice to our clients and you're no longer going to work for me. So why do we use a 9? Because the market uses a 9. Why do we use a 20, 50, 200? Because those are the standard moving averages. You can throw in 100 SMA in there as well. But one thing to think about, especially with those simple moving averages, because the 9 is an exponential moving average. But with the 20, 50, and 200, that also tracks different time frames of trends as well. So if you can really look at the short-term trend, that really is an indication of that 20-day moving average. And as you can see, this short-term trend here that really kind of started right there on the breakout of 1500 and then the continuation of 1520, that short-term trend starts to develop. And all of a sudden you see that 20-day moving average start to develop in a bullish uptrend as well. Whereas when you're looking at the 50-day moving average, you're really looking more at an intermediate trend here. And when you're looking at an intermediate trend, this is now just starting to get bullish from an intermediate standpoint. And that's why the 50 is kind of lagging against the 9 and the 20, is because you're seeing that short-term bullish momentum. So why the 9, why the 20, why the 50, why this, why, the same type of numbers on stochastics or MACD or RSI or any one of those indicators? It's simply because the market uses it. Guys, everything in the market is almost like a self-fulfilling prophecy to a certain extent, right? We follow the price. Moving averages follow the price.
I love it. By the way, those are the same moving averages I use as well for the exact same reasons. And there's a lesson out there. If you are an aspiring tackle trading coach, don't ever tell me or Coach Matt that you do it just because you believe in it. You better have back-tested data that is actually deep and proves your point if you have a new point that you're
more
trying
than
to make.
3 months.
Yeah.
More than 3 months.
Yeah.
You got to back test for a long time. And the beautiful thing about back testing, though, is there's a lot of good programs out there that allow you to back test a lot of data points within a short time frame, including the one in Thinkorswim.
Yeah, I'm a huge believer in back testing.
Things that I remember us doing when I, 4 years ago, 3 years, however long ago it was, when I sat in your office as your mentee. And the first thing you did is you pulled up the on-demand feature in Thinkorswim and you made me back test. I think it was 5 different covered calls. Actually,
it might have been more than 5,
I still have my notes from that day.
Wow.
Yeah,
I still have it.
We picked 5 from the 25, and I said, okay, we're going to back test this every day over the last year. And so we picked 5 stocks. We went back a year. And I had Cody go through his daily routine basically every day and have him make decisions based on, what's going on with the call option, what's going on with the stock, at what point do we make decisions to unwrite the covered call and capture growth, at what point do we buy a put option to collar the trade to protect against it, when do you buy back those call options, when do you roll them, and it's so powerful when you can sit down like that and go through a 220 days of time frame and get really good analysis.
And it did It was a little bit monotonous, but I'm so glad that Matt made me do that, because I mean, it didn't take 30 minutes, guys. We're talking it took hours, like 6 to 8 hours. We're sitting there, he's making me do this, and of course it did feel monotonous at the time. I'm just like, okay, yes, like next day, like nothing happens. I mean, we don't do anything. Okay, next day. But by forcing yourself to do that, and I'm so glad Matt forced me to do it, is when you really learn the strength and the understanding behind the different Greeks in the trades. And that's one of those things that just because you could put on a paper trade and you're like, okay, it worked out. It's like, okay, why did it work out? How did it work out? What could you have done differently? If you put on 20 different trades in paper trading, you need to be looking back at the data. Okay, 18 of them worked out. The 2 that didn't, why not? What could you have done differently? What could you have hedged? How could you have adjusted your position over time? And that way, when you back test it when you're paper trading, you can learn how to do it looking forward. Because otherwise, you're still just, the novice trying to figure out like, oh my God, what should I do? What should I do? What should I do? And you're living on hopium. And it's like, wait, don't do that. Be a trader. Know what you're going to do. If this,
I just go back to Richard Dennis, who was one of the greatest traders of all time and a self-made trader. And this is back in the mid 1970s, but he spent 4 years paper trading, guys.
Yeah.
I mean, 4 years paper trading before this NASA genius felt comfortable with his systems and his rules to actually get into the marketplace. And that's what you had to do back then, because you didn't have this type of technology. And in that one day, Cody and I had an entire year's worth of experience to really kind of have those conversations. And so it's just so powerful when you have that ability to sit down with somebody and really, logically go through the process of making decisions on what to do with any type of trading system. And so if people aren't back testing their systems and their rules, they're making a big mistake. And the problem with a lot of people today, Tim, is they don't want to spend the time or the resources or the money to actually do that. They just want to be told what to do, when to do it, and how to do it. And that's why they never become traders for 20 years. That's why they usually get shooken out of the market within a few months.
We always talk about trust the process, and that's a big part of the process. You got to put your butt in the seat. You got to do the work. There's no question about it. Love the story from your mentorship, Cody. Obviously, those are the kind of things that really shape a career, quite frankly. I do want to move on to the dollar, some individual companies and some other stuff that's in the news here today, Matt. The dollar is bear retracing, kind of an interesting little sloppy pattern in that regard. It is back above a moving average here. But volatility on the dollar index. What's your read on this one real quick?
Yeah, a little bit of slowing momentum here, Tim, and it is forming a retracement, but it feels like it's going to go stagnant for a while.
Mm-hmm.
You do have lower pivot lows, as you can see right here versus right there. You have lower pivot highs as well. So you definitely have a bearish trend here. And you also have that. Well, I got my Fibonacci that I was trying to make fun of. You do have this bearish trend kind of punching into that level right there. But the one thing that's giving me a little bit of caution here on the bear side of the dollar is that slowing momentum. As you can see it picking up momentum to the downside, it just simply slows down. And the dollar's a safe haven asset, very similar. And obviously it got bumped up today based on what was happening from a geopolitical situation. So yeah, I still think you're bearish, but you're right in that negative 40 bearish. And you're really kind of, and when you're in that time frame, it's a stock pickers market. It's a currency pickers market here.
With the dollar rallying, obviously other currencies are coming back down. It's going to be a really interesting chart on the New Zealand dollar, US dollar cross pair. I kind of like that one almost the most out of almost any of them here. Cody, you were talking about some of your day trades recently. You do that Forex report over there at Tackle Trading on a regular basis. That's a beautiful bull retrace, isn't it?
Oh yeah, that one in the Australian dollar were my top 2 picks going into this week. We were looking for the trigger above that green candle 2 days ago. We didn't get it, but that's okay. If you don't get your trigger, you're not in the trade. You're not losing any money. It's only if you get aggressive and break your rule that you're losing money here. But
it's got to hold here though, Cody.
It's got to hold. And actually the new trigger isn't necessarily above today's high. I think the new trigger is above the 9 or above yesterday's high, because that's going to really show that it's reversing. Now, some curious aspects of this is my other pick was the Aussie dollar. The Aussie took this political news right in the face. Jump over to the Aussie dollar for me, Matt. It's got smacked a lot harder than New Zealand dollar has, but the New Zealand dollar has been the stronger of the two. And I did a great discussion, I think it was about 3 weeks ago, on the correlation between the Aussie dollar and the New Zealand dollar and how correlated they are, and whether the Aussie was going to pull the New Zealand dollar back down as it came down or whether the New Zealand dollar was going to pull the Aussie dollar up. There's a rubber band type give and take between those two currencies. And the Aussie definitely got hit by some of these political tensions.
Yeah. Give me one of the two charts. I'm taking the other one though. I got to tell you,
Oh,
this
absolutely.
one's
Take
got
the Aussie
noise
dollar.
to it.
Yeah, but we've had the
Or
New
take the New
Zealand
Zealand
dollar
dollar.
ranked above the Australian dollar for quite some time now.
Sure have.
It is.
fact-
The Kiwis know what they're doing over there.
All right, let's break down some of this company news here as well. And Matt, first one I want to talk about is Boeing. Real tragedy there in Iran, and I don't really want to speculate about anything as to what could have happened there. But you did get a report of engine failure out of a 737-800 plane. I don't know what style of plane that is, Matt. You know the plane's a lot more
It's
than I do.
737-800. It's the predecessor of the 737 MAX.
So does it have the same software? Is there any correlation between the two things? They're different. They're different planes.
No. I mean, I saw speculation on that last night, but but the 737-800 has not been grounded. I mean, the 737-800 has had some of their own issues. Remember, was it 2 years ago that something fell off the plane, hit the window? It was a Southwest plane. The woman got sucked out of the window. She ended up dying. That was a 737-800. So they've had some issues with the 800, but it's not the MCAS system that's been dominating the Boeing news over the course of the last year and a half here. To me, it's just, and I said this on Twitter, I just don't understand why at this point in the game, why anybody would touch this company.
I just don't have any kind of investment thesis that would make sense on that. I mean, maybe you believe in the new leadership or the dividend or the long-term viability.
There's not new leadership. That's nonsense.
Yeah.
New leadership. They brought in the director of the board.
Yeah.
Who probably had information on the MCAS 737 problems the same way the CEO did, who was also a member of the board. So who they bring in from the outside that's going to bring in a new vision?
Nothing for me. Nobody yet, by the way. And
so,
there's
and by the way,
me.
Okay, I know we're talking corporate news, but 176 people lost their lives in that last night.
Yeah.
So
it's definitely going to make you think quite a bit, especially for anybody who does fly a lot like you and I do, Matt. There's no question about it. From an investing perspective.
I got to go get on a Boeing plane in a snowstorm here in about 3 hours. It's fantastic. I'm so happy today.
Yeah. It's not good news. Is there anything here when you
that plane's only
word,
3.5 years old, T?
Well, and when you
it was
hear
a newer
Iran,
plane too.
Yeah.
I don't really have an answer to this question. I did not want to bring it up, but when a plane crashes in Iran the same night that you have 13 ballistic missiles fired from Iran, it does at least make me scratch my head. Now,
I think you should put the conspiracy hat away.
Yeah. I think you put the conspiracy hat away because
every indication indicates engine failure.
Yeah.
Now, they did say it was I think they said it was a GE built motor though.
Well, there you go, buddy.
Yeah, you're just trying to make me happy now, Cody. For some odd reason, we'll bring up GE stock and talk about it selling or something. I don't know.
I think it was GE in collaboration with a French company that actually built those engines for the Ukrainian Boeing airplane.
Tragic news, though, and more bad news for Boeing, and definitely one that when the stock is sitting down here in support, Matt, probably more of a shortable candidate if it did break below support for whatever reason in the first quarter. $300 a share, somewhere in there. There's not a lot below that. I know that you've got between 320 and 300 would be a swing trade. Below 300, you're in a downtrend. So it's going to be interesting to watch that company develop. Let's move on.
I still don't understand why anybody would be buying this company today.
I don't follow it either. Yeah, I don't follow it either. Macy's did report better than feared holiday sales numbers. I always thought that was a funny headline when you read something like that nobody expected them to do great, but they did better than the worst expectations they had. Matt, the stock did jump up here a little bit. I would not touch that move, even though there are reversal characteristics in here. There's nothing there for me as a trade.
Well, that's just because we don't believe in big box retailers that don't have an online presence. But in terms of that reversal, you do have W type formations after a tremendous downtrend. And this is the first legit W type reversal formation you've had. Even in this down here, that was not a reversal pattern. That was an earnings report that came out that really kind of led to that price appreciation. So I could understand somebody looking at this and saying, okay, I might not believe in Macy's, but I do like what I'm seeing in that reversal. They did have a good report here today. Maybe if they reclaim $20, you start to see some bullish momentum. I would keep an eye on it if this is a company, but I would keep an eye on it only if it crosses that $20 barrier.
No, I'm with you. There are reversal characteristics in there. And by the way, one of the most important things you can learn when you're a new technician, new trader, is how to read pivot point relationships, Matt. We've got many bottoms developing there through the last year, and now we're starting to pop back up there a little bit. Interesting chart. Another one, Matt, is Lennar, and home builders have been one that we've been focusing on for a bit. This was good news for the entire industry of home builders, I thought. They came out with their earnings reactions as well. It did pop it up a little bit, gave some relief to the other home builders. I'm more interested in them than Lennar, but what was your reaction to this company's news?
The easily beat earnings, Tim. Here, easily beat earnings, came in at $2.13 a share versus the expectation of $1.92 a share. And they're only up 1.86% so far today. They were up 3.3% earlier in the day. But this isn't a company I really kind of track, but it obviously is positive news for this space in this industry. And when you're looking at it, it's the home builders have been underperforming a little bit in the last 2 months versus what the market has been doing. And so when you're looking at Tackle 25 stock DH Horton, you're seeing some neutrality conditions, but obviously showing a little bit of bullish momentum. Obviously a little bit of bullish momentum there as well. Toll Brothers kind of popping on that news here today, breaking out. Toll Brothers Tackle 25 stock from 2019. All of these stocks are fairly decent covered calls. The ones I like are DH Horton and Toll Brothers. But I did see the news as positive for the space that has been underperforming. That Toll Brothers breakout could be legit here.
Yeah. And then another news data point on Tesla here, Matt, and mostly just want something for Elon possibly to dance about again. It became today, with the move here today up to 493 at the high point, 490 is where we're at right now, the largest U.S. automaker by market cap in the history of U.S. automakers. Now, Ford was the last one in 1999, was worth 80 billion. Tesla beat it today. That's pretty incredible. I know that there's a lot of debate about the company. There's no question about it. It's probably short covering, like we've talked about. I know that it is actually, but you at least got to give them some credit here. I mean, that stock has been on a tear recently, Matt. What's your read?
It reminds me of marijuana stocks at $20 billion market caps versus what their actual revenues are.
Yeah. Tesla, Cody asked in the pre-production, is Tesla still a debt-driven company? And Cody, the answer is yes, it is.
They have a negative 90 PE ratio.
It was more of how debt-driven was, because I know it's debt-driven company, but it's how debt-driven is it? And it's still quite debt-driven.
Dude, it is definitely hitting new highs, though. That's 6 candles in a row after just a 2 hesitation candle pullback, man. That's not even a pullback. That's a flag. Every breakout has produced a pretty big move over the last couple of months. Don't you have to at least consider putting this on a bullish watch list? I haven't taken a single trade on Tesla. I just don't believe in the company. But I know that I'm missing out on that based on my bias. If a trader told you that they're long Tesla, would you fault them for that in the short term?
Absolutely not. A tremendous amount of momentum is going into Tesla from a technical perspective. I mean, we can debate the fundamentals of Tesla all day long. And I'm sure there's going to be, people that are on the buy side of that fundamental equation. I'm sure there's a lot of people that still are on the sell side, even some of those long-term short sellers. And I've never shorted Tesla. So, I bought put options on Tesla before, but I've never actually shorted the company. And so when you're looking at some of those long-term shorts and they've been capitulating, over and over, and maybe it's just the brokers calling in all their losses here. But I mean, the reality is you can debate the fundamental nature of Tesla. You can. And and I can see both sides of that equation. I'm still a fan of Elon. I just don't, again, how many times do I have to say this? I just don't like it when CEOs of companies try to manipulate shareholders. I don't believe that's okay. And if you're going to, and I was talking to my 10-year-old daughter yesterday, I said, honey, we just have to be consistent in life. Okay. Don't be a flip-flopper, just be consistent. And if I'm going to rail on Jamie Dimon for manipulating the gold market, I have to rail on Elon Musk, somebody I actually have deep respect for trying to manipulate the price of Tesla and trying to beat the short sellers. And I said, when he did that, Tim, how you beat the short sellers is you build a profitable company and that destroys them.
You build a better company.
build a better company. And he's on the way to doing that. So yeah, you got to give him a lot of credit, but at the same time, you can still debate those. Even the short sellers who have capitulated probably still don't believe in the company. They've just got it handed to them over the last 2-3 months here as Tesla skyrocketed from $220 to, pinging close to $500 now. But technically speaking, you can't debate this.
Yeah.
So if some trader came in and said, "Hey, Matt, I bought the $400 flag when it kissed off the 9," I'd be like, "Great trade. That's technically sound." If somebody said, I bought the breakout of this pivot right here at 440, great trade. And if we see a high base coming in to $500 and somebody wants to buy the breakout of $500, hell, I might join you if we see a high base at 500 with the trigger above 500, circa what we're seeing in Apple. And, we're pinging now at Apple at 302 with confirmation out of that breakout. I think you could see something similar happening on Tesla. So I'm not going to chase the dragon, let it set up for a better trade, but I wouldn't fault anybody for pulling triggers on Tesla technically.
Absolutely. Absolutely. And, Mohammed here in the chat, he asks, Coach, would you please analyze Apple? Very fortuitous that you brought this up right now. You've been talking about the breakout of 300, Mohammed. It's a pretty simple, clean swing trading breakout. Follow your step system rules. As with every other company in the market right now, they'll be aware of the earnings and kind of plan accordingly. That is coming up at the end of the month. I still think you got time to do that if you want to do that one. Yeah. And then a couple other companies in the news, Matt, I do want to get to. And before we end the show here, Walgreens Boots had earnings, WBA, and a Dow 30 component, obviously a company that we've all been in the store. They missed. It came down. It broke back below support. It was in a nice reversal developing pattern. Earnings came in, just blew that chart right out of the water now. It's not tradable in my opinion.
No, of course not. But I want to come back to the Apple trade here because nobody cares about Walgreens. When we're looking at this Apple, it's true, Cody. It's
I know,
true.
That's why I laugh.
Nobody cares
I still don't
about
understand
it.
why they have boots in their name, but whatever.
Gino makes that joke all the time, Cody. So
I want to come back to this Apple trade because it's a debate against confirmation versus aggressive triggering. Okay. And when you're looking at this trigger, very clean trigger above that 301 level, obviously we have not confirmed yet though. So anybody getting in today, and I'm not saying, one's better than the other because I like them both. There's times I aggressively trigger into a trade and there's times I wait for confirmation. But for me, when you're dealing with a company like Apple with so much momentum behind it, I think you can be a little bit more aggressive in this company because of the consistency that Apple's had in its previous breakouts. Versus when you're looking at some other stocks and there isn't that consistency in the breakout pattern, maybe you wait for confirmation here. The only debate I have is not on the trigger. Either one, you're triggered in on this breakout already, or two, you're going to bar by bar it after confirmation. The only question I personally have is where do you place the stop loss? And to me, it starts with that 9 EMA. This like Apple in the last month has not kissed underneath that 9 EMA. I think you got to get at least at a minimum underneath that 9 EMA.
Mm-hmm. Yeah, I'm with you. And by the way, it fits the narrative of what's happening across the markets. Earlier, we looked at the NASDAQ. It was the strongest index. Here's Apple leading the way again, looking great up there on the chart. And there's a lot of companies that are grabbing my attention here today. Netflix looking great. Lulu, TJ Maxx. There's a bunch of them, Matt. There's tradable candidates out there. Netflix is high.
I think this Netflix trade could be good.
Yeah,
I do. I think this Netflix. Now, we do have tight earnings coming up on, what is it, 17th?
It's tight here. This one's a tight one. Mm-hmm.
It's got to break like today or tomorrow type scenario. It would have to be a 3-4 day swing trade type scenario. You do have risk carrying it over the weekend with Netflix. But that breakout, oh my God, I just wish earnings was like a week and a half later, just a week and a half later, because this has been the signal you've been waiting to really kind of test the waters coming back into Netflix, because obviously it's tremendously underperformed the marketplace over the course of the last, 8-9 months, as markets have just been dinging all-time highs. I think we've had like 30 in the last, 3 months alone or 4 months alone. Netflix has been underperforming ever since that earnings report from last July. Reversal pattern type scenarios, I could see people trying to get into that trigger. Nobody got into that trigger, just investors or hedge funds or institutions. But as a trader, this is that shot you've been kind of waiting for. And again, the tight earnings is very concerning here. But when you're looking at that breakout right there, T, I think that breakout of 340 is fairly legit. Just earnings is tight. That's the only concern.
And speaking of earnings here, by the way, I was just thinking about it while you're talking. This might be one of the top companies I'm going to be very interested to watch the reaction to earnings, because I'm bullish coming into the year on Netflix, and January can set the tone for trends. This one's in a very key short-term and intermediate developing uptrend. So that earnings coming out here in about 12 days, whenever that date actually is, right after that expiration, I think Monday.
I think it's like the Tuesday
or
the
Tuesday.
21st.
When those earnings do come out, the normal number that most people were looking at was subscriber count.
Yep.
With Disney Plus now being out, I suspect that might not be the best earnings, but how much does subscriber count matter anymore?
We'll be looking at it.
Well, we'll definitely break that down when Netflix has its earnings report, but it's not just US based subscriber count. I know that was the thing that happened last July. Was for the first time in Netflix history, they actually contracted from subscriber growth, and that's kind of what led to Netflix underperforming fairly aggressively. But their international numbers have been extremely impressive, number one. Number two, and I've said this before, but the biggest concern with Disney Plus, Apple TV, and Amazon Prime and NBC and all these other starting to pull their content from Netflix is original content. And even though they didn't win a lot of Golden Globes, they were the number one producer of that got nominated. Netflix is here to say that the naysayers on Netflix, I think they have over exaggerated the death of Netflix with
I think so
Disney
too.
Plus.
I think it's got a great storyline for a comeback year here in 2020, starting out very good looking as it's pressing up there against resistance. And just a couple of quick ones here, Matt.
Very quickly on Netflix, shout out World War II in color, 10 episodes, Netflix original series. It is truly fantastic. If you love history, check that show out. That is truly fantastic show.
I want to say Netflix also did like a short documentary on how they actually rebuilt the color into those scenes, and it was really
beautiful.
Oh my God. Yeah.
That was beautiful.
Is Peaky Blinders a Netflix original? I don't think it is. It's a BBC show, right? If you've not seen that yet, by the way, it's incredible. And Netflix
it might be original. It actually might be original, but the last 5 years, their original content has gotten better and better. And I know they're throwing billions and billions and billions of dollars at it, but how is that any different than Tesla throwing billions and billions and billions of dollars in debt at their products?
Yeah.
Right.
Yeah.
Or how is that any different than Amazon throwing billions and billions and billions of dollars over the first 15 years of after their IPO, trying to build, Amazon or Apple or Microsoft? It's the same thing. Every one of these publicly traded companies. Sure. We got to stop thinking publicly traded companies are consumers with debt. There's good debt and bad debt.
And I think that whole Disney Plus is going to take Netflix clients was way overblown last year, because people like myself and yourself, Matt, will just pay for both. There's a lot of people that will just pay for
Blinder question. It was BBC original. Netflix bought
there you
it.
Go.
Now it's original Netflix. It's both. They took it over and they continued the season as Netflix original. So
last stock here that I want to look at, Lulu. And if you guys got any, obviously we can do that as well. But looking at so many companies, by the way, on the Tackle 25, AXP looked great. Boston Science looked great. Bank of America looked great. But man, Lulu grabbed my attention. Tackle 25 stock, Matt, we've got our first 2020 edition of the Tackle 25 Mastermind Group tonight for those people who are in the system and a pro member over at Tackle Trading. Make sure you come and attend that. But this is a good looking setup here. High base, kind of running.
Yeah, a little bit of a retracement, trying to break out. Not a lot of strength there, but yeah, good fundamental stock, good cover call stock, breaking out. I could see a swing trade right there. And the only other stock I have, Tim, is TJ Maxx. And the reason I bring this one up is just my old teacher's heart here, but you are breaking out today out of what is called an ascending triangle.
Yep.
And that breakout, that's legit. That line I just drew probably isn't, but that breakout is. Keep an eye on it. Let's see it confirm.
We saying our favorite setups? If so, I gotta go with Starbucks. Starbucks is my setup I'm watching right now.
Very similar to the Netflix scenario.
Yes, it is. Yeah.
Yeah, very similar.
The only thing I'd like to see there is a little volume come in. That's a pretty good candle for no volume.
I agree with you. I'm waiting for the volume to increase there as well. But
Yeah.
right where Matt's got his cursor, that's above that line is where your trigger is.
By the way, one thing I'm going to do this afternoon after we get done here is I'm going to run naked put research on all the dirty, sexy money candidates, Matt, because I like some of the reversals I'm seeing across the board in many of our watch list. Pinterest, Slack, AMD is looking good on a bullish uptrend. And I did get a question earlier about the 5G this year. Somebody was asking, I think it was Austin, what we thought about 5G. Well, go listen to the podcast from 2 weeks ago, the predictions podcast, because that was one of the key bits of analysis in why we picked the sectors we picked, Austin, which were communications and technology for the year. We think it's going to be huge. Matt, that's a wrap here for today. Great job.
Let me just say one thing very quickly, T. Hey, Team Tackle, let's give Tim a lot of love today. His dog, Sadie, Great Dane, of 12 years, Tim?
She was 12
years.
Yeah.
12 years old, been struggling health-wise for many years now. Unfortunately passed away yesterday, and I know how much that dog meant to Tim. So let's show him a lot of love today.
I appreciate that,
Tim.
brother.
We love you a lot, Tim.
You know, she was a damn good dog. I was sitting in my office last night. My wife put this video on Facebook, and it made me bawl like a baby. I got to tell you, you know, it is the nature of life. And I think there was a lot of lessons for my kids and our family, but just grief, man. I mean, you know, Matt, you guys are an animal family. You know how much they mean to your kids, your wife, and how they become a part of the family. So I appreciate that, man. Yeah. All right. Well, what a somber day here.
Let's end on a happy note. What's a happy thing that you guys got going on right now?
No, I don't need happiness just for you to fake it, Cody. I'm going to be happy outside of it.
Hey, I don't fake it.
That was so Mark of you. That was so
always in a good mood.
I don't need your fake happiness today.
Yeah.
You must be related to Mark a little bit today.
Yeah.
No, I'm actually going to be in a great mood. I'm going to go and get ready for the rest of my day, do some naked put research. I've got some work I got to get done over at Tackle Trading, and we've got a nice mastermind group tonight. You know, the thing about life, Cody, you put your head down, you just get right back to business. It is the way that men deal with their grief, Matt. I think a lot of people do it this way, but that's what I'm going to do.
I don't think that's just a man thing.
No, it's not. And I like the high base that we're getting on the market right now. So Matt will have to buy me a steak dinner.
Hold on. We're a long ways from that, dude.
Come on.
Go intraday.
Hold on.
Look at this. Look at that. That's a high base.
That's boring nothingness that's going to continue over the next 3 hours.
It's a tough bet. I'm probably going to have to buy another steak from Matt. I don't know how many I'm on the hook for. Pretty much whenever we go to a steakhouse, I probably have to buy Matt a steak is really what it's shaping up. I think I still owe you 2 from last year.
I'm glad you admit that finally.
Or it's 1. It might be 1. I'm going to admit I'm on the hook for 1 currently. No, I would need confirmation. 2. No. C'est la vie. By the way, guys, if it
gives you the options market is giving you about a right around
25% chance,
25% probability.
Mm-hmm. Yeah, those aren't good odds.
I like my side, and Cody, it's going to be a nice steak.
That's fine. We'll go golfing, and then we'll go get a steak.
I love it.
It'll be a good day. It'll be a good day.
I'll buy the beer, you buy the steak.
Sounds good.
Beautiful thing.
All right, Team Jack, we're out.
We are out. We'll see you guys tomorrow, same time, same station.